Welcome to Eye on the Money, the television show that gives you insights into how to improve your financial well-being as well as make your money work for you. I'm your host, Ingrid Nantege. In today's episode, we shine the spotlight on the growing uptake of mobile lending solutions in Kenya. According to the 2019 Finaccess report, nearly 8 out of every 10 adults in Kenya have a mobile money account, more than triple the number recorded a decade ago. The survey shows that the uptake of digital loan apps has grown to 8% of Kenya's adult population in a span of just 3 years. However, the proliferation of mobile banking and digital loan apps has introduced new risks, chief of that being fraud. Now I'm joined in studio by personal finance coach and expert, Mr. Manyara Kiragu, also author of a book, How to Be a Long Life Financial Success. You're welcome, Mr. Kiragu.
Thank you, Ingrid.
Now I understand you've had a personal experience with debt. I hope you don't mind sharing with us your story about debt and maybe the lessons you learned from this.
Sure. Actually, it's not one incident.
Oh.
I've had several, but one that comes to mind immediately is the most difficult situation I've ever encountered financially, and that was many years ago. I used to have a business, an export business, and then it failed. And in the course of trying to revive it, I went to travel to the US and went with the merchandise to sell. And then when I went the second time around to collect the payments, I was actually stopped at the airport and I was kicked back out of the country. Yes.
You didn't make it in?
So I didn't make it in. And you can imagine that all my creditors were waiting for me back home because they knew Manyara has going to come with a lot of dollars from the US, and here I was being kicked out without even a cent. So it was really, really difficult. But like they say, every cloud has a silver lining. It was actually that incident which pushed me over to doing personal financial coaching and training as a profession. Because before I went there, I had already taken some courses in personal finance, but I was dilly-dallying about it, and I was not taking any action. But when I was sent back, I had no choice.
Right.
I had to now start working on it.
So with that experience, and now to bring us back to the topic of the day, what are your thoughts on the increased uptake of mobile app loans by the country right now?
Actually, the mobile phone and the internet, both of them have come together to give an opportunity to very many previously unbanked Kenyans to participate in the financial sector.
Yes.
And that's a very, very big plus.
Yes.
However, it has also given the opportunity for investors to invest in loaning money to individuals who previously were not even banked, many of them. And many of them are financially naive, so they're very easy to mislead, and they end up in a debt trap, many of them. So it's got pluses and minuses. And if one uses it wisely, it can help in times of emergencies.
So you mentioned that it has played a very great and good role when it comes to financial inclusion, because then it has brought in even people who initially were part of the unbanked population.
Absolutely.
If we're doing a compare and contrast situation, is this the better way to go to get mobile app loans as opposed to sticking to the traditional way of getting loans, say by just going to a bank and applying and going through the process? What's your take?
Well, the thing is, once you let the cat out of the bag, you can get it in. That door has been opened. Closing it again is very difficult. Now, what I believe could be a better way to handle it is regulation of the organizations that are providing these mobile loans, because the loans by themselves are not a bad idea. The only problem is some of them are being misused because it's unregulated. And By unregulated, I mean they can charge just about anything they want to. You'll find some of them charge up to 7.5% per month, which actually translates to over 130% interest per year. Now, compared with a normal bank loan, which is 14%, that's scandalous. And the formal sector, the formal banking sector, have also joined in the.
They're tapping into.
They're tapping into that because it's really good money, but they will never accept. They will never agree that charge is called for it to be called interest. They're saying it's a fee. But what's the difference? It's a cost to you, just like a bank interest on a bank loan. So that's one of the main problems.
Right.
They are really, really expensive, and if somebody who is not aware about the cost continues using those kind of loans, they are going to be spending a lot of their money just paying that interest, and that's not good use of money.
So with that said, you mentioned that away from even the disadvantages that you just mentioned, it's really a very convenient and easy go-to place in case you need that emergency money right here, right now. So in order to make proper use of it, going into getting a mobile app loan, what should I consider? As someone who goes in, like, let me go borrow from maybe the different providers out there, what should they put into mind? What are the considerations they put in place before they do this?
Actually, the most important defense or way of protecting yourself is to become financially literate, so that you understand what role debt should play in your life. I've seen some reports about what that money is being put to, what kind of use it's being put to, and although they say that about 30% of it is going towards business, supporting businesses, more than 15% of it is going towards normal daily expenses, and some of it is even going towards betting and entertainment. Now, we've got to understand how to use debt, even before we decide which kind of debt, whether it's mobile loan debt or bank debt. Debt has got a very key role in one's personal finances. It can actually be something that can help one achieve the financial goals and improve the financial situation. But if misused, because this is a double-edged sword, if misused, it can keep you in eternal financial bondage. Now, first thing, there is good debt and there is bad debt.
Let's differentiate the two.
Yes. Good debt is when you borrow money and use it either in a viable business. Another good debt is when you use debt to buy an appreciating asset, something that's increasing in value, or you use debt to increase your skills and thereby your income. Those are three good ways of using debt. And you notice when I talked about what the mobile money is being used to, I said 35% of it is going towards business.
Right.
And I said that's not necessarily bad. But when you borrow from whatever source and then you use it for entertainment, that's a big mistake. That's a bad debt. Or use it to buy depreciating assets, that's a bad debt. And unfortunately, because mobile loans are so easy to get, many of them are being misused to the detriment of those people who are borrowing. And since they're also very expensive, the damage can be very severe. And you'll find that many people actually end up being perpetually in debt. When they finish paying, when they pay off one, they immediately borrow the next one. So it becomes a normal part of your budget. And when you're doing that, when you're borrowing continuously at such a high rate, that means every month you're giving whoever is lending that money a lump sum of your money. And especially if you're using it for something which is not beneficial to you financially, then it's all a total loss.
Right.
Yeah.
You said it yourself, that debt does not necessarily have to be a bad thing. And we've also often had, you need to keep taking out loans, you need to keep, maybe taking that M-Shwari loan to build your credit. My question then is is taking out a loan via the phone or an app a good or viable way of building one's credit? What's your take on that?
My take on that is it's a very expensive way of building your credit. You can do it without paying that much by using a credit card and paying it off every month. And that way, you don't even get charged interest.
So what would you say are some of the viable, more reasonable options out there as opposed to?
For increasing your
less expensive, for building your credit, like this is what instead you should look at as opposed to.
That's what I mentioned.
Right.
A credit card would be a much better way of doing it because the interest rate, although it is still higher than the bank loans, it ranges between 36 to 72%. It's still much lower than the amount being charged on those mobile loans. And you don't have to pay that interest because if you pay your bill when it comes due, then you escape that interest. It's only when you roll it over into the next month that you incur it. So that's a much better way of building your credit rather than taking those mobile loans, because the mobile loan, in fact, they charge the fee up front. So there's no way of escaping the fee. And it's very high.
Right.
Yeah.
Also, just to maybe better understand how these things work, usually when you go to a mobile app loan, before you take out, before you're given the loan, usually they'll tell you, oh, you don't qualify, you won't get this loan. Or in other instances, they'll tell you, oh, you're a perfect candidate for this. They'll even give you a fee more than maybe what you're interested in.
Yeah.
So what criteria goes into this? Like, how does this work? What's the eligibility? Like, why will I be denied? And you, on the other hand, will be accepted to take out a mobile app loan?
Well, one of the places they check is the Credit Reference Bureau, that's the CRB. And if you're listed there, then definitely you will not be able to get any loan from those apps. And also they look at, some of them have access, especially the ones who are partnering with the mobile phone companies. They get access to information about how you deal with your mobile money, the sending, receiving, saving. So they get that information from there, and from that they're able to judge whether you're a good credit risk. Now you'll find many of these organizations, they say the reason our fee is so high is because this is an unsecured loan, and so our risk is high. That is true, it is an unsecured loan, but records show that in the long run, over the long term, the risk is not so high as to warrant those sky-high interest rates of fees, as they call them. So I believe it's just they're just taking advantage of the lack of regulation. And once again, I say, I believe the way to protect our people is through regulation and also education. Now, the problem is who will educate the people? Employers do some of that education, but it behoves on each and every one individual to educate themselves so that they are aware about the pros and cons of every financial decision that they make. Because sometimes we suffer terribly, unnecessarily, because of making decisions such as borrowing and then using that money on frivolous expenses or betting. And also, by the way, betting by itself is already a no-no as far as financial management is concerned. Because although it may look like fun, it may look like of no consequence, and it's a small amount of money, it's been shown that over the long term, at least 10% of the people who bet on a regular basis, they become addicted gamblers. And a gambling addict is just as bad, is even worse, and more of a danger to himself than an alcoholic.
Right.
And so they end up messing, they end up getting deep in debt. And one of the avenues for them getting easy debt is the mobile loans.
So just to dwell a little bit on the aspect of regulation, because you mentioned when it comes to these mobile phone apps, they have the leeway to set their own interest rates because they're not regulated by the Central Bank of Kenya. At the same time, I would like to know, so what happens to me if I default with these mobile apps? I mean, there's really no regulation. So what happens? What are the repercussions?
Now that there is no regulation, that should make you worry, because unfortunately, some of them end up adopting underhand methods for collection of the money. I've even heard of people being threatened that the mobile loan company will send notices to all the people on your address, in your address book, that you owe money and you're not paying. No, you can imagine.
Wow.
Yes. And now they'll be sending to your employer, to your boss, to your boyfriend, to your girlfriend, to your husband.
There's really no stopping them.
Yeah, but that is really underhand methods of collection. So, because of lack of regulation, such behavior takes root. So regulation would actually be one thing that will really help protect the consumer from being harassed, and also being overcharged, and also unfair means of collection first, and also deceptive advertising. Because when they're advertising, it looks like it's really a good thing. They're telling you that our interest is only 5, 6, 7%. Right. Or in fact, they don't even call it interest. Our fee, a small fee of 7.5%. But 7.5% translates to over 130%. Right. Now, if this person who's thinking of borrowing knew that it's 130%, as compared to the SACCO, which is 12%, would they really borrow?
No, they would consider going somewhere else.
They would consider going somewhere if it is necessary.
Yes.
So education would play a very big role. Regulation and education, those two.
Right. So debt, from what I'm taking home from this conversation, is debt is not necessarily a bad thing. There's good debt, there's bad debt. You just have to do your homework. You just have to be knowledgeable. You just have to know what you're doing before you go into this. We're going to come back and continue with this, but for now, I have to take a very quick break. And as usual, you can be part of the conversation by sending your comments and feedback to our social media handles at Metropol TVKE on Facebook, Instagram, and Twitter. We'll take a quick break, but do not go anywhere. Welcome back to Eye on the Money, and today we're talking about borrowing using mobile phone apps, and I'm joined with Mr. Manyara Kiragu, personal finance coach and trainer. Now, just to pick up the conversation from where we left off, you mentioned that one of the criteria that these mobile app lenders use to extend credit to you is by checking your credit status. Like, for example, they'll go to the CRB to get your information. The question then is, because there's really no regulation, you mentioned it yourself, do they, on the other hand, then go ahead to list us in the CRB, or even I'm home and dry, like my credit record won't have to end up in the CRB? Will I get away with it?
No, you won't get away with it. In fact, that's one of the main dangers, in that you if you are not faithful with paying that little money which you borrow from them, because it starts out as a small amount.
Yeah, like 2,000, 1,000.
No, it starts out even smaller.
Wow.
Even a few hundred, yes. Wow. Yeah, depending on what they've seen, how they've rated you. Now, one of the main dangers is that you can actually ruin your credit by not being faithful to paying such things. I've seen people being listed on CRB for not paying mobile loan debt.
Wow.
Of just a few hundred shillings.
Wow.
Yes, and that makes it very difficult for you to borrow for other serious things. And of course, you know that when you go to a bank to borrow money to buy a house, to borrow money for a business, borrow money for any money which you borrow from the bank, they have to check the CRB. So if you defaulted on a small 2,000 shillings loan and you're trying to buy a house, sorry, things will not go very well for you. So that, yeah, they do report you. You will not get away. Yeah, and they make your life miserable because they keep calling you. They keep threatening to call other people who are on your address book, right. And that can be disastrous. That can be really harassing.
Now, on my part, where's my route for recourse? in case of incident and now I'm the aggrieved party, again, this issue of regulation, where do I go to report in case anything goes wrong due to a mobile app loan that I acquired?
Actually, the truth is that unless you go to regular court and sue them there, which most Kenyans are unlikely to do because they know how the court process goes, how much it costs, and how long it takes. In fact, I remember there was a case that one of the consumer organizations, they took to court. They were suing, I think, Central Bank and I think CBA, if I'm not wrong, and CBA, because of those mobile phone loans. Because they were suing them. They were saying that they were violating the law, but they went and said no, they're not charging interest. They're charging fees, and the case was thrown out of court. So really, unless you just go to court, that's your only recourse.
So I'll just sample one social media feedback real quick, just so we can get back into the discussion. And I'll take this from Twitter. At Ivan Mbugwa would like to know, what happens if I do not pay? There's no guarantor. There's no, sorry, that's not the one. That one we answered. At Ivan Buga wants to know, are they exploitative due to the fact that they don't ask for paperwork and you can ask for your money within a few hours? You kind of mentioned this, but like they want to know, are they exploitative? Should we be worried at how quick, how convenient, no paperwork, nothing going into this? What would you have to say about this?
Well, if we say that the rates which they charge for that money is usurious, then they are exploitative in that sense, because the charge is way, way above anything that's reasonable. And if banks charge 14% for the bank loans, and even before that regulation limiting the interest rate came, they were charging not more than 23, 24%. These mobile loan providers, on the other hand, they charge over 100%.
Yeah.
If that's not exploitative, then I don't know what exploitative means.
Right.
Yeah. But again, it comes back to the financial literacy of people, of the person borrowing. If you don't realize you're being taken advantage of, you'll be happy saying that these people are good, they're giving me money quickly, and you don't. Whereas you don't realize that you're actually being taken advantage of. Yes.
Realistically speaking, debt is somehow inevitable, because at some point I feel like there's a situation where your finances, your income won't exactly meet your needs, or maybe you'll want to progress in a certain way and so you don't have enough money to finance this. So you'll have to look for another alternative to get this money together. My question then is, how much is too much debt?
That's a very
When
good
does
question.
it get out of control?
That's a very good question. First of all, we have to remember about the good debt and the bad debt. And as far as possible, we should try and avoid the bad debts. That's borrowing to increase your standard of living, borrowing to buy depreciating assets. Like, for instance, you should not be borrowing to buy a television set or borrowing to buy a sofa set. That's a mistake. That's a financial mistake. So if you avoid the bad loans and focus on the good loans, there is still a limit as to how much you should borrow. And the rule of thumb, and this is a very general rule of thumb, it doesn't apply in every case, but in general, you should not be paying more than 36% of your gross pay towards debt. And I know that there are some people whose pay slips, they read like the roll call of all the financial institutions. You find somebody's got such a good salary, and when they receive the pay slip, the top reads very, very nice fat salary, and then comes in the deductions. This bank, this SACCO, this so many debts, and then at the bottom you find that they are receiving only a very small portion of the salary. For a lot of people, they pay over 50% of the salary towards debt. Now, when you do that, irrespective of whether you're doing it for good debt, you are putting yourself in a very tight situation, because the first thing is you'll find it difficult to, even if you have a family, to give your family a good life. You will find it difficult to to buy them clothes, to take them out. You'll simply be working for your creditors. Every time the salary comes, most of it goes to your creditors. So you should not pay more than 36% of your gross pay towards debt. That's the rule of thumb. And that, by the way, includes a mortgage if you have one. If you do not have a mortgage, that should come way down to 20 or even 15% of your salary.
So maximum 36%?
Maximum, if you have a mortgage. Yeah.
Maybe one final thing. The reason, and you mentioned it yourself, we're seeing so many people go towards borrowing from mobile app loans as opposed to going to the traditional way is because of the convenience. Money comes real time. They eliminate the red tape. They eliminate that letter you have to go get from your counselor. So the question is, then what should financial institutions or the relevant powers that be, what needs to be done within the confines of the law? Because these are regulated to, to help out people out there, to give them like what needs to be done to provide better alternatives for people to borrow from that they won't lose too much in the process.
Well, unfortunately, the formal lending, the formal banking sector is so regulated that that paperwork is necessary, unfortunately, because they are not lending their money, remember. They're lending the depositors' money.
Yes.
So for that reason, they have to be regulated. These mobile app people, most of them are lending their money. And so they can take much risks. They can take much higher risk. They are not regulated as the documentation required. It's their decision, however. So what one should do, from the individual point of view, is first of all learn how to manage your money so that you're not forced to go and borrow from such sources. How do you do that? By having a budget. Now that word budget doesn't sit well with a lot of people, because when somebody says they should have a budget, you kind of imagine that no, life is going to be very boring.
Stringent,
yes.
I'm going to have to eliminate this.
Yes. But unfortunately, that's the wrong view, because a budget actually liberates you. What you do is you make sure that all the money you're spending is accounted for. You tell your money where to go,
right,
rather than letting the money go and then wondering where it went, which is the case with most people. Because after payday, within a few days from payday, most people say they're broke. They don't they don't know where the money went.
It's true.
So having a better control over that will not only give them a better life, it will also make it unnecessary for them to go borrowing from such places.
Right.
And things like entertainment, and they should be in your budget. Somebody will say, yes, but what about emergencies? Now, that's one of the places where we Kenyans make a big mistake.
Right.
We sit around with no emergency funds, and that's a financial mistake. We should, there's a rule of thumb that says that you should have an emergency fund which is a minimum of 3 times your monthly expenses. Minimum, that's an absolute minimum.
Right.
And in fact, for the people who manage the money properly, they usually have 6-month float for, so that in case an emergency occurs, they can take care of it without having to borrow from such places.
Wow.
So an emergency fund really, really takes care of that.
Thank you very much, Manyala. This has been a very, very fruitful discussion. So financial literacy, just having your priorities in order, and better financial management are very, very key when it comes to managing your debt. That's all we had for you today on Eye on the Money. But before I let you go, as usual, I'll leave you with the financial tip of the day. When looking for where to borrow, spend time shopping around, researching what's on offer and getting advice. You may think it will take too much time if you need a loan quickly, but you'll be paying the price for years to come if you don't. Always look at the total amount you'll have to repay when borrowing the money. If you have any questions on how to make your money work for you or where to spot investment opportunities, we invite you to visit the Metropol terminal for in-depth reports on different areas of the economy. I've been your host, Ingrid Nantege. Thank you very much for watching Eye on the Money. Have a good evening.